Hey traders, one for you day traders out there. If you're trading US equities or US indices, US futures, if you like, you're trading indices on a CFD spread bet or futures contract, this may well help you out. Stick around. Hey guys, warm welcome to you. All right, so like I say, if you're trading the indices, I say the indices, we have US, you're probably trading the futures contract. You get the idea. The underlying is the index. So index, final hour. If you're trading European stuff like DAX, FTSE, etc., this isn't as effective because the close of Europe tends to be kind of drawn on whatever the US is doing. That's just the way it operates. You know, the US is a bigger market, tends to pull the US, European markets around. Not always. Of course, someone's going to say, well, I've been trading the DAX, and yeah, I know, not always, but generally speaking. So this really applies to the final hour of the US trading session for the UK. That's 8 p.m. till 9 p.m. wherever you are in the world. It will vary accordingly. All right, so my rules are this. I won't trade the final hour if we've had a quiet day. I'm just not interested. Most of the time you're going to get a close at the VWAP. Now VWAP, as you know guys, if you watch some videos, is a key indicator. Very, very useful tool for day traders. If you aren't using it, I think you're missing out. Again, everyone each their own, but I really think it's a valuable tool. Anyway, VWAP. So if the VWAP is kind of, if the day's been quiet, it's been highs and lows and mean reverting, VWAP's going to be generally pretty flat. And most of the time, price is probably going to close around the VWAP. Sometimes you get some extensions below it, but because it's quiet and it's range bound, I'm just not going to trade the final hour, trade the closing hour, just because, you know, likely to close at the VWAP, but sometimes you're trying to chase that mean reversion type trade. There's not much in it, and sometimes some selling can come in or buying. It's a little bit of a coin toss to me, so I just won't trade it. So I will trade it if I feel like we're in a stretched environment, trending environment, or something is some supply-demand imbalance. And I most of the time I'll prefer to the down. If I'm honest, I prefer to the downside. Upside's great, but generally speaking, upside trend days just grind and sit there at highs. The difference is if there's been some kind of news that's pulled us off lows and it's a panic buying, that's slightly different. And very rarely do you get those kind of things. But if you get like a V-shaped low, some bad news in the day of gap low, and you've just been bought high, maybe it's a catalyst like you know, something big like a presidential election or something like that. That's different because there's panic buying, urgency to it. Generally, trending days are chugging. So I prefer, generally speaking, and I'm being general, I'm doing general here guys, I am with a lot of things, there's always exceptions to the rules, but generally speaking I prefer, if I'm going to trade the close and I haven't already got a position I'm looking to unwind, and this is a fresh position looking to make some money in the final hour, I'll want these attributes. Markets at lows, pretty heavy down day, pretty reasonable volume. Pretty is subjective, you know, you decide what that means to you. Maybe it means over 250 points on the Dow if you're trading the Dow, whatever it is on the SPOO, whatever it is on the, you get the idea. So decent range day, breaking out of multiple week range, that type of thing, urgency, something going on, people are interested, there's higher time frame money involved. Good, because I want to get involved in that, because my job is just to ride the coats of those guys who were sloshing around large amounts of money and take my money out of it. Say thanks very much, you know, I'll have my money, I'm done for the evening. That's the idea. So what are the things I'm looking for? I am looking for, my rules, if you like, are price is stretched, something's going on. Now, this is where we start to go into little intricacies. So really my whole theme is to sell into the close and close at the close, cover the short at the close. But where am I going to do that? Now, you can get caught out in this if you're not careful, because it's, again, it's not black and white, everything, guys. If we have a scenario where this little dotted line here, I'm going to move to this chart here, we'll move back to one in a second. That's the final hour, right? If we're down heavily and we're at lows in the final hour, you've got to be careful. I always want to see some attempt at a rally first. If it's rallied before the final hour, I just still don't want it. I still don't want it. There's a little sweet spot for me, and this is personal. Again, you know, I'm sure people are going to say, hey, I'll do this and this, and that's absolutely fine. But for me, let me explain why I want this little nuance. So if we're at lows in the final hour, there are some exceptions, but let's keep to the rule for now. On the final hour, I want to see that we have some attempt at a rally, because that Number one, it shows its true colours. It shows if it's going to bounce off the bottom in the final hour. It often does. Often does. Bounces, rallies hard, closes, undoes all that. A lot of the selling. Fine. That's not a trade generally I will look for. There are certain times I will, but broadly speaking, at the moment, no. But I want to see it try to get up. I want to see it try and push up. I want to see it try and do something in, you know, the 15 minutes, 30 minutes, 45, pushing it a bit, let's say 30, going up and just trying to push the highs, you know, putting that little resistance in, trying and finding a resistance. That's the key point, guys. Finding a resistance at some point that's not too high up, but it's high up enough for people to think, well, it's recovering. Yes, it's great, it's great, it's great. This is where the sweet spot is. You're in the final hour. It's 15 minutes, 30 minutes of rally. It looks reasonably bullish in that 30-minute period, but it starts to stall. It starts to stagnate. There's your sweet spot. Now we can start to frame and structure the trade. I like this. This is where I'll start hitting it. I'll start getting involved in this game. You can start watching that as a level to work your short off, sell short here, and your target's going to be in fresh lows or the closing bell. So you've seen a bounce, which I think you have to. I don't like selling into lows when we've got an hour to go because we haven't had that bounce yet. Now, difference is if we're right at the lows and we've had the bounce, then I might even add some and get really aggressive and start hitting those bids into lows the last 5 minutes if it's the right conditions. I've been known to do that, but there'll be a cushion in the trade before I do that and just be adding into lows looking for that final flush. That's by the by. The fact is, we want to see this. We want to see this unwind a bit, see the response to the unwind. Buying, buying, buying. It struggles, it struggles, it struggles, it struggles. There's your sweet spot. There's your short opportunity. Looking, I'll always tend to cover into the lows. Some depends if I'm feeling like, you know what, the structure on the higher time frame looks great, then I'll hold it into the close, or I'll even add some more on the way down and really try and get as much size on as I possibly can and squeeze as much out of this and almost give back all the profit potentially just to get that one big final like vomit of price. So last hour, little rally up, stalling, 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 curling over. Time here is important. If it hasn't done it, you know, I don't want to sell it into that final hour, about 15, 30 minutes. And I know we're asking a lot, but this is often the kind of pattern that we get, guys. That's a good opportunity. Now, let's look at some other ones as well while we're talking about it, because I like this type of stuff, guys. I like this. And the reason I did this video is because we had two recently, and it's super rare at the moment. So I twiddled my thumbs going, where's the bear in me, bear in me? I've actually got a bear cushion in my office. I should wheel it out one day. And it's like, I flipped it over because I'm not trading so much in bear side. I flipped it back over, like, yep, bear's out to play again. Couple of days this week, we've had these pushes, or last week, we've had these pushes into the close. I dust off the old textbook and go, or the old playbook, if you like, and say, yep, this is the one. I thought, I know what, you guys on the channel are going to appreciate this one. Let's give you a little bit of an overview on this. This is the other little approach that I prefer this. So we're stagnated, that's okay. I said I prefer a down day, but if we start to really accelerate into the close, this is different. We've started to accelerate into the close. The VWAP is slowly rolling with it, but generally has been flat. So up until then, you've not bothered. Now, if I'm really being honest with you guys, I probably won't trade these because I tend to not hang around. If the market is just messing around doing nothing, I'm not going to sit there and hope something happens. I might set some alerts if it's very, very specific and come back. So I tend to not trade these, but if I'm there, I'm in a deal already, or if I'm ready for it, if I think it's going to happen, then I'll trade it this way. Similar type of thing. This time, you're not waiting for a bounce. You're waiting for this to build like a snowball, starts to go to lows, breaks through lows, tries to pull back, goes through even more lows, that's what we want. That's when we can start selling into. Now, I say selling into lows, I prefer a little bit of a red bar, a couple of red bars to sell into, because it's not quite as clear cut as this type of thing, but it's the kind of, we're not doing anything. We're going to, we're going to lows. Whoa. And then it's like, whoa, panicking. That's when you can get on the short side and start to play the game. So that's another one that's well worth watching in the final hour. If it's been doing nothing, then catches out with a volatility expansion or range expansion in the final hour, selling into lows. So we've had that, and we've had this type of thing. Now, the other one is, if it starts to rally, and let's say we shifted that, can I do it without it looking too cluttered? Let's try. Imagine that hour was here, and it started to rally into there. That's too early for me. I know you're like, Mark, geez, you guys you're so specific. Just the way it is sometimes, guys. I've kind of learned the hard way, and I've got the things that I like to see, and when I see them, I'll hit them, and I don't see them, I just don't want to get involved in it. If it's rallied and it's too early of a rally, so we see the same pattern, exactly the same pattern, but we see it rally, and it's saying rally from 7:30 till 8, so an hour and a half before the close, up to an hour, it's too early, because I feel like it's got too long to go then. You know, and there's some slight, sometimes if it sits there for a while at the highs, but I just don't like it as much. If it's doing a counter trend rally too early in the day, or too early before the close, I don't like it. I feel like that's, you know, that's not really what I'm looking for. I like to, because let me tell you why. Because I want to see that counter trend rally push up 15 minutes, 30 minutes, and then I want people to go, oh bleep, sugar, we have to get out of this position and we only have 30 minutes left. That's where the sweet spot comes in. The rally, the push, with only, and then people going, oh God, we've got 30 minutes to get this deal done, otherwise we're gonna have to use the out of hours, which is not very liquid, and we ain't gonna get the size we want, and this, that, the other option's gonna close. Right, sell. Then that's when we get the aggression. So you see, we've only got 30 minutes left. We've already got a little bit of panic. They've got a little, oh, it's relief. Starts to roll with that plus that 30 minute window to operate in, and at lows, and panicking, and where could this go, and urgency. That creates the perfect storm of then we get those big flushes into lows. If it's rallying too early, and people got time, and if it starts rolling back, it could still double bottom and rally again. Just, it's the wrong structure for me if it's rallying too early. So, personal thing, guys, you know, you would adjust and adapt to suit you, but I like to see that type of flavor, that type of little clip up, testing, struggling, but with only 30 minutes or 45 minutes left to go, or the changing conditions from kind of range bound environment to massive volatility expansion. You know, even better if we've got a catalyst, someone comes out and says something's negative for the market, that's even better, because you know, there's warm up. Now, very final thing, I know this video is quite long, guys, but final thing here, just be careful pressing into lows. I know it's tempting, and I know you think it's easy money, and I do it, but I will do it when I've got a cushion already on the deal from higher up, and I'm saying, okay, I feel like this tape looks weak, I feel like this bid's going to crumble, I'll press a few clips into the lows, and that'll just add to the size. But if it pops up, which they can do, I mean, it can snap up, you can have a real beast of a green candle that just folds and folds and folds again, and you've got to be prepared for that, and it can't be ruining the whole deal for it. That's why you've got to be careful slamming, you know, slamming contracts into lows, because you can get those spike up. So if you've got a bit of a cushion, then I think it's a little bit different. Anyway, this is going into all the intricacies and stuff that's way too much for this video. Apologies, and if you're still here, appreciate you must like this kind of stuff. But I'm like, guys, I just go into little intricacies and I start thinking about different trades I've done and taken, and little nuances, and when to dial up the size and this and that and the other, and I go off on a tangent. The whole point was my rules for trading the last hour. Hopefully you got something from this video, guys. If you like this kind of stuff, then, you know, a thumbs up is appreciated, and you know, comments, shares, all the other stuff, they're all appreciated as well, even if this video is not quite up your street. Take care, guys. See you in the next one. Get your risk managed. Bye bye.